Hey everybody, this is Paul doing a quick dividend video on a pretty rough day for the markets, but yesterday was a complete opposite day. So if you kind of see here, this was Fed day right here where they decided not to do anything. The market reacted very happily to that news, and now the market is reacting to, you know, jobless claims coming in at about 259. 250 is kind of that area where people start to pay attention to jobless claims. So you have jobless claims kind of going up to that 250 area from 212 or whatever it's been sitting at, some ridiculously low number. So 250 was actually kind of normal before COVID. And then long-term claims, which means people that have been looking for jobs for a long time, that's starting to go up too. So there are some red flags. And then also you had the manufacturing survey come out this morning that missed. It was a 46. I think people were expecting it to be a 49 or something like that. But you know, that's kind of where we're at on that. So the market's reacting. Also, it's just people taking profits. So for example, like for yesterday, I was up, and this is on the same day that I get a bunch of dividends that pay out too. 1,400, like across the board, I was just up a lot. I think this might show the difference between the prices. Yeah, this was yesterday. So look at this. This was yesterday, and then this is today, if you get a general idea. So I'm down about 390 in my primary portfolio, but I was up 1,300 by itself yesterday. So zero point 0.5 down compared to point, you know, you can pretty much tell what people are selling. It's not a lot of the stuff I have. It's mostly tech. So this was just yesterday. So I could have done a video yesterday and then pretended like everything was just wonderful and everything was great, but I was gonna wait till today, and just to kind of show you the difference between like the market goes up and the market goes down. So what I actually did end up doing today is I don't think the market's going into a recession anytime soon. There's just too much stimulus in the system. Uh, I think there's a lot of rate cuts priced in right now. Markets mostly just reacting to different things that are going on in politics, like and then you can kind of see here. Um, this is the oil thing right here. This was like oil was was Israel struck inside Iran. Was Iran going to respond? And then nobody said anything. And you can kind of look like Nvidia was up 14% yesterday, and it's down 8.4%. So the market is just literally wait and see mode, just waiting on CPI data. Um, to see how fast are we slowing down. Are we slowing down faster than the Fed predicts? The Fed seems very, very, very confident that we're not slowing down as quick as what the data seems to show. So I don't like how the Fed runs their operation. I think they should have cut 50 yesterday. They should have cut 25 at their last meeting. I think we've been at 2% inflation and we're heading below it for a while now. Because if you just use real time OER, um, we're there. We've been there for a second. So, but they don't use real time, so we have to rely on their stuff. So I guess this was also something that's been kind of getting kind of funny. This is called the 1929 line. So this is ever since the federal government really really got involved in markets, and there's this trend line that goes all the way back to 1929. And the guy Savin Heinrich, who's on Twitter, he runs this thing right here. It's been pretty bearish, but he does get bullish every once in a while. But he kind of posted this right here, and it's called the 1929 line. And we don't break this line. You don't. And when you break this, when you go near this line, you end up going below that line. And I swear, the very next day, because some people were making fun of him, and I swear, like 2 days later, the market did something very similar to what you're seeing right now. It did this. It was that day we had that 2% day earlier in the month. Um, but I thought that was just kind of hilarious because some people were actually making fun of him. They're like, "Oh yeah, yeah, see, haha, that's not, yeah." And then sure enough, the market just like I think it was right here, and then the market just completely tanked or something. So it tanked twice actually. You can kind of say. So there's definitely respect the line. The line exists for a reason. This is basically when the government got involved in the market, you know, just all over the place. Um, Strange thing, BlackRock was trying to buy my shares of BSTZ, but only in my Schwab account. I don't know what that's about. They were trying to buy these 16 shares. I don't know what that's about. I didn't. I declined. Um, and then this is the jobs claim. So as you can see, this is I believe this shows long-term claims. Oh no, yeah, this is long-term claims. So you can kind of see we had this remarkably low period here, and then the Fed started hiking, and the Fed has gotten their desired effect. The problem is if this keeps going up, it goes from talk of 25 cut or 25 basis points to 50 basis points. Um, and then you can kind of see where core the inflation numbers keep coming in much lower than where they were. You can see here. So we're printing below zero point 0.2 or right at zero point 0.2. We have the SOM rule. Basically, this is just kind of an indicator that tells you if the jobless rate is starting to get up there. If you're starting to see more layoffs than hires, and where you're starting to see that. So this is just a very interesting chart that I saw on Twitter here, and it said basically 35% of the population lives in states that breach the SOM rule. So this is definitely what you want to watch. And Powell got asked about this yesterday. Specifically, is the Fed paying attention to it? They were pretending like they don't pay attention to it. Trust me, they pay attention to this. He called it like the statistical something or whatever, but it's something that when you have a recession, this triggers, and it has to get above zero point 0.5. I believe it's a weird calculation. You got to go look at it, but it's a rule. You'll hear more about this rule if we start to get close to a recession, or if bears want a bear case scenario. You're going to hear this rule right here, so you can go look that up. But GDP, as you can see, keeps coming in really strong. Um, we just have a lot of fiscal. There's just a lot of fiscal in the system right now. So you can kind of see government expenditures, consumer consumption still up there. As long as this keeps happening, stuff like this, it's just profit taking to me. That's all I see is profit taking, especially when you see like stuff like Nvidia selling off. These stocks that just went up insane amounts. You couldn't even explain why they were going up that amount. You couldn't even justify the price on them anymore. They're just up. You knew they were going to sell off. Somebody was going to be left holding it. And the guy probably bought this at like 130 right here when it was like over $1 trillion a company or whatever. Probably is regretting that decision, but you never know. He's delusional. So anyways, what I've been doing, just basically exactly what I said I was going to do whenever I did say that they were going to lower rates. So my portfolio has been performing pretty much exactly as I expected it to. Um, as as rates have gone down, as you can see here, people are piling into munis. Those shares the last time I bought BBN shares was in May, and I bought like a lot, 462 or some craziness when I sold my O and put it all into BBN. Um, those shares alone in May are up 10%. My price point on these is 1618. I'm sitting on 2,300 worth of capital gains off of this. It's just simple. It's just when this goes down, it no longer becomes tax competitive with this. This just has better tax advantages. Well, municipals, period, have better tax advantages to them. So people pile into municipals, they pile into bonds, looking for safety, looking for risk-free returns. So that's kind of what you get right there. So basically, I've actually been selling BBN um, as it's because it was at 43,500 just this morning. I sold 1,000 of it and put it into BST. Um, if you look at this portfolio right now, it says 83,759. That is because I literally took 1,500 out um, to pay down. If you look at my credit card balance here, right here, this was at 7,700 in my last video, or actually something like that. But I had like different things that had that, like big purchases and stuff that kind of hit. Like the battery, in my car went bad on my brand new car went bad. They sold me a bad battery with the car. Never going to that dealership again. But so that actually that number right there should be 1,500 higher. Um, so if you just throw the calculator right there, it should look like this. That should be the title of the video. Probably. I haven't even updated these numbers over here, but that should be the title of the video. But if you want to know why it's kind of down like that, it's because I literally took 1,500. I put 500 here. Um, you know, I put 500 right there, and then I took 1,000 and put it towards the card to pay down the credit card balance, just because BBN has been outperforming by such a massive amount. Like small amounts of moves in BBN is like $400 a day, and I'm very determined to keep these goals where they're at the moment. So once I hit maybe 100,000, I might bump. Once I hit 100,000 invested, I'll probably bump this up to 200,000, and then I might start adding the BBN again, maybe. Um, but right now, every time that I get like up to like 43,500, which is not very hard if you kind of look at it. So say if this was 1750, you see, it doesn't take that long. So what I do is I sell 1,000 and then put it there. It has a higher yield, and it's not. I haven't hit my target on that yet. And since tech is selling off and BST is in tech, there you go. I'm buying it at the lows. So it doesn't take very much. So say if this hits 18 for example, all of a sudden I'm at 44,000 without having to do anything. Um, so it is very possible that BBN by itself could almost carry me to the 100,000 goal. How quick does it shoot up? It depends what kind of cuts they do. They're pricing in 3 or more cuts this year alone. If you look at the 2 year is moving. The 2 year is not supposed to move, but people are pricing in cuts 2 years out. 2 years out, this is where the market is telling you that the 2 year is going to be. So the 2 year is supposed to be sitting at 5.5, between 5.25 and 5.5. But this is where the market is telling you the 2 year is going to be in 2 years right now. That's a lot lower. So BBN will probably be higher as the economy weakens, because I think there's lagged effects in the economy the Fed is just completely just oblivious to, or they're just stupid. Um, like they can cut 25 all they want, it's not going to do anything. You'll get a bunch of people that do mortgage refinances, but there needs to be like 4 or 5 more cuts to make the economy start to react and go back up. Because the fiscal spending is just really disguising a very weakening labor market under the surface, especially in the white collar sector. So, but I think the portfolio is currently in a good spot. Like I said, today I'm down maybe down 400. Yesterday it was up 1,400. I'm not stressing. So, I think that's where we're at, and I'll leave it there. Just leave any comments. So, thank you so much, and y'all have a nice day.